Welcome back, traders, to freetradingvideos.com. I'm here with Breakout Trader. I'm going to take you through my favorite formation here in technical analysis, and it's called a falling wedge. Let's go. Swing high, swing low. You can see we get double top right here, two swing highs coming through, and then we get a severe breakdown. Now this is the interesting candle. We'll come back to this in just a minute. We come back up, we have another two swing highs here. We break lower than the previous swing low again, and also lower than the macro or the major swing point back here. We then push up. Now as we push up, we cannot exceed that upper trend line, and we pull back along the trend line. Let's break this down a little bit. Let me show you the key points here that I really like to see in this chart. First key point, we can see the upper trend line joining the swing highs as we come down through here is a pretty aggressive trend to the downside. Pretty aggressive angle to the downside. When we join the swing lows through here, we can see that the lower trend line is nowhere near as aggressive. So that's telling us that demand is increasing or supply is decreasing, one or the other. If we look at this down leg, when we get to the last candle here of this down leg, we get that gap down, then we get a small body candle, and we have huge volume on that small body candle. Now a candle, all it is the ratio between supply and demand. So a small body candle, we know supply is slightly greater than demand. Well, where's all the volume come from? It has to be demand. If that was a huge supply day, we'd have a big red candle down. We do not have that. We just have a small candle, so that's a image there of demand coming into the market right there. And as we can see, the next couple of days we follow to the upside. Now volume does drop out at the same time. We then get the pullback. Volume continues to decrease here. So that's showing strength in this stock, or showing the participation on selling, participation on supply in the market is reducing. And that's a very, very promising sign. Then we push back up. We can see we get a slight increase in volume, slight increase in demand, participation on the buying price on the buying side. And then we get this nice big deep pullback. We pull back or sell off right back into this prior support area here. As we do that, we can see we get the small body candle here. The shadow is longer than the body, and that's an indication to me of demand, and we don't have a lot of volume on that. Is that a positive or a negative? Well, let's take a look at that. We have the downward move. On this candle here, we have a lot of sellers become exhausted. So for the stock to move up the next day, it does not take a lot of demand. And that's why you don't see a lot of volume there, because we don't require a lot of demand to push that back up. This is an indication of sellers being exhausted. We also can witness that prior to the swing low, because we didn't push a great movement down to the downside. We can see the range here is very large. The range here is very small in relation to that prior big move. So this is an indication that the sellers are exhausted. We then push back up, and we get the pullback. On the push back up, we cannot break the resistance area, the upper trend line. So we just pull back along that trend line, then we get the breakout here. Nice big volume, nice full body candle. The candle up candle here engulfs the down candle of the previous day. This is a bullish engulfing candle. This is a beautiful, beautiful formation right there. We then break out. Right here, we do not get follow through. So we had a little bit of a sign of weakness. We see we're right into resistance area, previous swing high, and then we get the pullback along the upper trend line. It's today that we really like. Yesterday's candle was great. We can see we get a nice pullback, 4 candles in the pullback, right into that lower trend line, what was once a resistance, now support, and nice volume on that candle yesterday. So the nice volume is the indication of buying pressure starting to increase, or demand starting to increase in the market. We received confirmation of that today. Nice big candle to the upside, nice big increase in volume here. That's a beautiful, beautiful picture. So tomorrow, what we'll be looking for is a break above that 80.75 area right through here. Get above that resistance area, and we could look for a trade. Now we know we have a resistance area right through here, right around that 85 price point, right at the 50-day moving average. We have another resistance up here at 95. So there are a couple things to look out for. If we were to take the entry around that 81.75, 82 price point area, I'd be taking some profit around this $85 price point, and then my target would be 95 in this trade. Now, why dry ships? Why DRYS? Well, one, transportation average has been doing phenomenal the last few days, the last couple of weeks. Two, dry ships has great fundamentals. I will not trade a company, I will not even day trade a company without strong fundamentals. If you want to trade with the institutions, you have to use fundamentals, period. This is Breakout Trader, freetradingvideos.com. It's been an absolute pleasure. Until next time, Breakout out.